Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, November the 7th, the year 2018. Let's talk trading. Trading and trust. What does trust have to do with trading? Well, if you really think about it, it has a lot to do with it. One, you have to trust yourself. And a lot of people don't trust themselves. They don't trust their decisions. They don't trust their skills. They really just don't trust themselves. They don't have the faith. They don't have the confidence in themselves. Second thing with trading is you have to trust the system or method that you use, because there are going to be times when you trade when it just seems like you can't win. It's easy to trust the system after one loss. Can you still trust it after 3 losses in a row? What about 10 losses in a row? Or 5? Because if you really don't trust the system or the method, you're going to succumb to tinkering. You're going to start searching for some other indicator, or start changing the settings on the indicator, or maybe chuck the whole method because it looks like somebody else is winning while you're losing. It's not necessarily a grass is greener situation, and it's not necessarily a FOMO, fear of missing out situation. It's just simply you lack trust. So, as you trade for the rest of this month, I want you to think about that. Maybe make it part of your trading warm up. Focus on whether or not you trust yourself to make the decisions and take the actions to follow the system when you get the signal. Can you just remember that one thing, that it doesn't matter to the market the reason you entered the trade? All of the analysis, all of the work you did leading up to clicking enter the trade, either the buy or the sell on that trade, the market doesn't care. Because one time you click the mouse and it's going to win, and the next time you click the mouse, maybe it loses, and the time after that, maybe it wins, maybe it loses. You don't know. That's why it's called trading, because you don't know. So, trust. One thing you should have the absolute trust in is your money and risk management, because you trust this and it will benefit you. You don't trust it, you start monkeying with it, then maybe you'll luck out, maybe you won't. So, trust. Do I trust the wick zone? Absolutely. And you can see here, those who trusted the monthly wick zone, right now, if they're still in that trade, they're up 236 pips. I mean, these are the kind of trades, what you can do, you can just do a simple experiment. You put the trade on that monthly wick zone, and if it goes your way after a day or two, maybe you move the stop loss up to break even +1 or +5 if you're 50 or more pips. And then you just leave it alone and you just see how many pips you can make. So, for example, right now, you're 43 points above the midpoint, or 42 pips above that midpoint. Maybe you bring the stop loss up to like maybe 129.53. And so, you would definitely, if you got stopped out, if price dropped back down through that monthly midpoint, you'd walk away with the lion's share. But I mean, you could do one of those simple, penny a pip or dime a pip trades on that, and just let it go for the entire month and see what happens. I mean, worst case scenario, maybe you would have stopped out at, I don't know, 10 pips or something, maybe 20, whatever your risk management tells you can risk on a little teeny trade like that, and just see what happens. On the weekly, you can see here we pushed through the upper wick zone for that previous week's candle, and you see here right now 65 pips to the good. Not a bad trade once again. And looking here, we've got 1, 2, 3, 4 pairs that still haven't filled the gap. Interesting, the pound dollar. Let's take a quick gander at that. Oh, that was looks like a cigar or hand grenade trade there. 129.612, and we've got a weekly low of 129.64. Oh, so we missed by about 3 pips. Well, that's still a miss, but not much of one. So, in other words, if you had gone short and you got down here, you would have either stopped out at your entry -1 here on the short, or break even +1, which would have been a -1, or you would have taken the trade, taken most of the pips off the table, and banked it. Okay, let's drop down to the daily. And if you notice, I start with the monthly, and then I go down into when we start to do our day trading. So here we've got the daily, and you see here we broke through that high, and we're now 33 pips to the good, 18 pips off of the high. So there's a possible 50 pip trade right there. On the range, we've got 7 pairs over 100 pips, range being high of the day minus the low of the day. And most of you guys know that, but every now and then there might be a new trader that's not familiar with what range is. So we have to accommodate those, who are new to this game. Remember, we were all new to this game at one time or another. Okay, here we go. Buy zone. There was a short, hit the pivot, take the money off the table, right? There was a short trigger. Actually, there was a long trigger here. That looks like a scratch trade. Short trigger. That probably should have been a scratch trade because, see, it failed to make a new low. Right here, we had a long trigger. That should have been profitable somewhere in this area. Should have taken profit. Here again, we had a long trigger, but as you can see, price action is making lower highs. Most likely you should have triggered out of that with a scratch. Here's a short trigger. Once again, failed to make a lower low. That should have been small pips or a scratch trade. Here we rocket through. That was a long, and you see here somewhere in this area you probably would have taken, maybe even right here, you would have taken profit as price moved back down. Maybe you took it all, maybe you only took some, but you can see price did go higher. But when we're taking these trades, we're just taking the odds in our favor. Sometimes we play them long, or we play them for the long period, or sometimes we just take what we can see. Okay, Larry, live trade right here, short 129.94. So you can take that red rat zone trade right here. And we've got about 5 or 6 minutes left in the video. We'll see if that trade's paying off or not. Okay, we saw that we covered the pivot, and we hit weekly R1, which is something I said, let's look, see if we can hit that. But we haven't taken out the weekly pivot. On the daily, you can see we took out this daily pivot right here. Right there, we took out, whoops. We took out the daily pivot, so now we only have 2 missing pivots. One down here, one up here. Not sure who's going to get taken out next. We're 167 pips away from this one. and we're 200 pips away from that one. So, who gets taken out next? Oh yeah, I made a little modification here on the spread dots indicator. So I need to go in and change something right here. Changing the font size. What I did was I also added in, this is the ticks, and this is the number of pips for buying and selling. In other words, how many pips you could have gained just by taking that signal, from buy to sell or buy to wait or sell to wait or sell to buy. Seeing how many pips there are. And we can look at that on other screens too. Okay, price action. You've got one ball at the bottom. See, green at the line. That was far away. That was 10, 20, 30 pips away. You got the signal. But if you have faith, there was 10 pips to be had. And then as you see here, one ball at the top. Pro traders red at the line. Beginning traders here red at the line. You were still good for 10, maybe 20 pips. 10, 20. If you wrote it out, maybe 30 pips. Okay, one ball at the bottom. Green at the line. Once again, we had a 10 pipper. And if you took this one green at the line, because there's a one ball at the bottom, 10, 20, 30, possibly 40, possibly 50, possibly 60 pips. And you can see here on the pips, oh, I see something very interesting. I've got to clear out something out here, because that waiting shouldn't be repeating. Okay, we can do that. So you can see right here the pip movement after the signal. So on that one, there was 41 ticks of selling, good for 2.7 pips. Right now, we've got 23 ticks buying, 1.9 pips. Okay. Once again, candle color at the line. Wick zone, price doesn't like staying in the wick zone. Holo zone, nice short here. And let's see, don't we need to go back to the rat zone? Okay, so we're in the pips on that Larry live trade. Once again, the holo paid off. Inventory reduction bars right here. There was a short, another short's being triggered right here at that long. My favorite screen. Okay, you can see here now we've got 3.6 pips of selling. And that bothers me. I'm going to have to send out a fix. And right here, you can see the selling based on the bid going below the peak of the ask. Here we go, a Larry live trade right there, looking at the Einstein line. Just remember, trust, because it's not what you trade, it's how you trade it. So go out there and drain the banks.